morning, good afternoon, and good evening. My name is Trang, and I'm delighted to be back to host today's Refinitiv Perspectives livestream. Better integration of the S in ESG can help investors identify more resilient and profitable investment opportunities. Yet the relevance of social metrics is still often downplayed, partly because of the belief that they present a lesser financial risk or they are less likely to be subjected to regulatory action or other punitive measures. This perspective, however, is misleading and needs to be challenged. To discuss how and why, I'm really excited to welcome Linda Zeilina, CEO of the International Sustainable Finance Center, Matt Friedman, CEO of the Mekong Club, and Sidanius, Global Head of Financial Crime and Industry Affairs at Refinitiv. Welcome all.
Wonderful to be with you. Thank you, Trang.
Hello.
Thanks so much for joining us all here today. And it's a really exciting topic with a lot of different topics, I think, to cover today. So I wanted to jump straight into it. And I guess really start off with a broad question around ESG and how I think in 2020, ESG funds and investments that really took into account environmental, social, and governance factors have outperformed the broader market. And many have believed that might be an anomaly because of COVID, while others think that it's really here to stay. I just wanted to kind of turn to you first, Linda, to get your thoughts on whether this trend is continuing in 2021, and if yes, why would that be the case?
Thank you, Trang, and thank you for having me. It's a real pleasure to join. So over the last year, we actually worked with Refinitiv, White & Case, and the Mekong Club, and with the involvement of PRI, Principles for Responsible Investment, and others. And we tried to have a look at the S in ESG. And the interesting thing is, I'm sure that almost everyone has now heard about ESG, environmental, social, governance criteria. And I think it's a very interesting time and perfect timing for this live stream, because only a few weeks ago, we had the report from Scientific Beta on ESG Alpha, which was called Honey, I Shrunk the ESG Alpha. And it created a lot of controversy, in addition to Tariq Fancy, former BlackRock manager, who said, listen, ESG just doesn't work. Yet the flows are just there. There's money going into ESG. Everybody's interested. It's a buzzword. And I think it's very, very interesting to unpack what actually is good ESG and good ESG data and a good approach. And this is where our working group came in, looking at what actually sits under the S, under the social criteria. I think it's a trend, not only that will continue, it will become really key to become a good expert on it and outcompete the others, because it's a busy space, it's a noisy space, but this is something that is going to continue. All finance will become ESG finance. So what risk was in the 70s, ESG will be going forward. It will become just the new normal. So we need to get used to that.
ESG, the new normal. I think that's a good way to describe it. Che, do you have anything to add? What are your thoughts?
Yeah, no, I completely agree with Linda. There's no question that the impact of the COVID-19 has accelerated the interest and really necessity for us to really look at how the institutional investor community invests its capital. Now, as Linda said, the environmental agenda, the E part of that, is well known. It's fairly well understood, and there is not only a regulatory and policy pressure to ensure that that's the case for us to look at those factors. The governance, of course, but the social has kind of been lost. And there's no question that the Black Lives Matter movement, that the pandemic, in terms of understanding the inequities and how different sectors, companies are dealing with some of these issues. And it turns out, in fact, that investment in ESG is not a nice to have, but in fact, it does better. The risk volatility is lower. The performance, the stock performance of companies and sectors who put a prime piece and focus on this issue perform better. And so to Linda's point, the primary objective with this working group is move beyond, we think it's the right thing to do, and we all want to do the right thing to do, but can we actually look at the indicators that's really needed in order to show to the investment community that not only is it the right thing to do, but actually it's better. it's better for your performance overall. So there's no question this is going to continue. It's going to accelerate, and we all know that there's $30 trillion estimated of wealth under management or assets under management that's going to transfer from one generation to another, which is the largest wealth transfer in human history. And the generation that's coming up, they care about these things deeply. So it's not just the right thing to do, but this is the way of the future. So how can we best harness our intelligence and data and expertise alongside the Mekong Club and TR Foundation and Linda's organization to really make sure that we focus on this issue in the best possible way?
Thank you so much. And I'll come back to the work of this working group and the white paper you've published last week. But I think I wanted to pick up on what you both mentioned, and really the fact that I think sustainable investing and sustainability in general are often associated with environmental issues. And the social, the S in ESG, tends to take a backseat compared to environmental or governance indicators. Matt, I wanted to turn to you to understand why is that the issue when these social matters are in fact really important and can pose a huge risk to companies' bottom lines.
Well, let's go back in history a little bit. During the 1990s, for 10 years, we heard about HIV/AIDS. Almost every single day, there would be an article, an expose focusing on that because it was the issue of the time at that particular point. Now, AIDS hasn't changed much. It's still a horrible disease. It's killing a lot of people, but we don't talk about it. We haven't heard anything because what happened was the new issue of our time was the environmental movement. And that went from around 2000 till around 2015. Everyone was talking about it. They were looking at the data. They were debating. They were saying that the world is going to have all kinds of issues if we don't address it. And as a result of that, within ESG, it got the prominent kind of emphasis. People were talking about, people wanted change, people wanted it to be measured. And as a result of that, the E was kind of where we started to focus on ESG. Governance was always kind of something that had to be addressed, and it was easy to get the data associated with that. So that was also done. But around 2015, things changed, where we started to see a lot of emphasis on modern slavery and justice and forced labor and issues related to people. And that movement went on for a couple of years. But what really punctuated all of this was COVID. When COVID hit, and all of a sudden you had all of these people kind of looking at what's happening in the world and, what is it that's important, business with purpose became an essential part of the equation. So for a long time, it was three things that businesses had to focus on: profit, prestige, and growth. Now what's been added to that is business with purpose. And as a result of that shift, people want to see what's happening with people associated with businesses. And that's why the S is all of a sudden getting that prominent place.
Thank you, and really insightful. And I think what the Mekong Club does around modern day slavery and forced labor, I hope you can maybe share it later in some of your other answers. But Chiet, do you have anything to add to Matt's point? Do you agree?
Well, Matt put it so well. Business with purpose. That is the adage of the day. And while many companies, of course, on their tin say that they're doing the right thing, they're treating their employees and their customers and their suppliers and the ecosystem in which they work and live in, the focus has really come on what exactly are you doing? How do we translate the word and intention into real action? And in a way, in an ironic way, we started with the E, as Matt said, but actually we should probably started with the S, right? Because at the end of the day, it's the impact that we have on the environment, on ourselves, on our companies, on our employees, and on our customers that has a externality that translates into climate change, environmental degradation, human trafficking, labor rights, all the rest of it. So actually, I think we all got this wrong, that we should started with the S. And it's unfortunate that recent events has really put the point on this issue. But that's why, again, I'm so proud as an organization, alongside with the Mekong Club and Linda and TR Foundation and so many others, are putting the people first in a way, because if we make some inroads on the social, then I think the positive externalities of that focus will translate into the environmental and governance.
And then I guess your answer really leads into my next question, which is really around this research and white paper that has been ongoing for, I think, over 12 months with some brilliant partners. And I wish we had everyone today, but I think you represent so well the diversity of the people that were involved. And Linda, as pretty much the lead author in it, I just wanted to find out what were really the key findings of this research on the myth associated with the S in ESG, and importantly, how do you plan to take these findings forward, and how do you plan to use them?
Thank you. Indeed, we have quite an unusual group because we also have Equage as part of the group that they work on a variety of related sustainability issues. I think the main finding was that sadly, investors still, in majority of cases, don't see the social performance as a key part of investment analysis. It seems that there's this misperception that is actually historic, and it is there for a good reason, because the legislation hasn't always been there. It's been a lot of politics around it. But sadly, it is a misconception that you can ignore the social criteria. And as Matt actually explained very well, and I think Che agrees with me, that people and planet are interlinked. So we have systemic issue, and we need to try and figure out how to fix it. And from the investor side, the main myth is that social criteria is immaterial, that it will actually negatively affect returns. Well, I think this is, again, something very interesting. What we found through research is that actually majority of assets in companies are now intangible. It's talent. It's the kind of people you can attract to your business, how you retain talent. And that is really changing the game, because this means that you do need to look at how companies perform socially, both from risk mitigation, but also from competitiveness and growth aspect. So I think that is a very interesting key finding, that for investors, actually, if you want to outcompete others, you need good data. And it was very interesting to work with Refinitiv and see the really bold action and work on improving the data. I think that is fantastic. It was very interesting and very amazing work that is happening now. And there is resources and there is actually data to start integrating social assessment. And we just need to really start seriously tackling it and also figuring out how we plug the data gaps.
Thank you so much. And I think for me, one of the most enlightening message was around data. And I think I'll come back to that topic actually in a while. But I thought, Matt, being one of the representatives here out from Asia, I wanted to get your thoughts on the findings, especially I think in this part of the world where sometimes I think investors say that the S and the E are even conflicting with one another. I don't know what your thoughts are.
Well, the importance of the paper is it blew the myths out of the water. For years, I would attend conferences where, it would be a panel like this, where you'd have 3 or 4 people talking about the day when someday S will be articulated and managed, and they give speculative kind of examples of what that might be. And, for a long time, we were just kind of waiting for that day to come. What was nice about this group is somebody drew a line in the sand and said, it's time to do this. It's time to put something down on paper, to take the reasons why this hasn't happened, to articulate answers to them so that we are able to kind of debunk them so that we can kind of get on with the process. And so what was really important about this is that it now has said, here are the 5 reasons why you can't do it. And here are the 5 reasons why you can do it, because those things don't mean anything. Okay, and so once you kind of put that off to the side, you're ready to say, okay, let's get our hands dirty and jump into this type of thing. Now, the interesting thing about the environmental movement is when it was first kind of being addressed from ESG, there was a lot of starts and stops, and it went off in a couple of different directions. We have to kind of just experiment with the process. We have to start using these indicators. We have to play around with them. Eventually, we will get to a point where there are as well articulated and measurable and data sourced as any of the ones that we have in E&G. And that's why this particular process is so relevant and important.
Thank you so much, Matt. And yeah, I think going back to Linda's point, a lot of people believe that one of the key challenges to ESG investing is data availability and data quality. But actually, I found it fascinating. This paper uncovered that there are so many sources of data and disclosures, and it's really perhaps more an issue of navigating that complex space. And you know, Che, obviously coming from Refinitiv, the data provider, what are your thoughts? Like, do you agree with this, and why is this the case?
Yeah, no, thank you. And to build on Matt and Linda's point, so this project was actually quite, it was interesting for me because on the one hand, we completely agree that there's more data there than many investors probably are aware of. And there's a lot there that you can actually do. So hiding behind the issue of, well, you know, I don't know where to start. Well, there is a place to start. There are indicators that we can provide and that we can harness. But on the other hand, of course, there's more for us to do. There's no question. This paper is not the end, it's the beginning. And to get to Matt's point, it's enough about, you know, everyone's looking at each other, policymakers, the industry. So, and this effort was an attempt by us and all the other partners to do something. You know, let's not waste any more time on finding the perfect answer. And I thought that the 5 myth-busting summaries hit the nail on the head. And I got to be honest, I was surprised. I thought, you know, as a company, we have 140 different indicators for the S. And the initial thought or thesis was that, well, let's help the industry and let's help others, saying, you know, you don't need 140, you just need these 10. It turns out that it's more complicated than that because there is no real data standards. There is no real common definitions and data taxonomy, actually, internationally. And we know this firsthand, not only because of the work, the data mapping exercise that we did with Linda's leadership and Julia from Thomson Reuters Foundation, who really led this project, but we're also engaged with policymakers who are looking for exactly the same answers to exactly the same problems that we've identified. We were just on a call last week with a high-level group from the European Commission on the Green Deal, right, as an example, and Green Deal has very much human rights and labor rights as part of it, and they don't know the data taxonomy either. And so I think this is the beginning part of an important process to build trust, to build relationships, to really leverage our insights. And so I'm not going to, you know, say here that this paper is the definitive on this question. The answer for me was we've got a great start, but there's more for us to do. And I think the next phase, when we get to that, is really kind of build on these really groundbreaking findings. And like anything in science, when you start with a premise and you don't find the answer that you're looking for, that itself is a very valuable exercise, because in fact there's a lot of things that you've learned through that process. So that's we're committed as a company on this journey to work with the Mekong Club and Linda and many other organizations and more to really build on the success and the great insight from this paper and from the S Working Group.
Thank you, Che. And I think there is a wonderful annex as part of this paper that really kind of maps out all the different indicators from different organizations that I encourage everyone to check out. But Linda, do you have anything to add around, you know, all the myth that you've uncovered related to data?
I think Che is absolutely right. We have that problem that we don't have comparable data points, and that is creating a lot of noise, and that is often used as an excuse not to actually do anything, or not to even properly look at the social indicators from the investor side. But I think that what is also changing, and Che touched upon it, is actually the legislation around disclosure, legislation in terms of what is to be expected. So Europe is going to introduce European single access point for disclosure. So these are big developments. The Biden administration wants to actually somehow align. There is that interest. So in the next few years, things will really change, just like they actually changed with the environment as well. And because of the pandemic, because of the outbreak, yes, maybe we have some sort of a spotlight moment when people actually have realized that people matter in a very systemic way. So I just hope that we don't lose this momentum and we really energize. And what we really need is some key investors, one of the big players that are managing money, to actually make a serious commitment to this. And I think there's a lot of positive reputation to be actually gained for somebody who decides to do it and actually sticks to it and tries to figure out how to do it. And I think because I run a think tank, so as the role of civil society is actually to scrutinize, not to be scared of that scrutiny, but actually to embrace it and improve it. And I think that's why it's so important what Thomson Reuters Foundation did by convening this working group, is actually bringing together extremely cognitively diverse group. And what we really want to do going forward is engage much more with the investor community and actually help them. And on the website, you can actually find details how to get in touch with us and actually discuss this, because there's so much free resources and so much more that can be done at this stage.
Trang, I just wanted to add to that. I mean, when it comes to key investors, we often think of the big funds and the big investment companies, but the key investors are the average person on the street who wants to know that their retirement fund isn't exploiting people, isn't using people, isn't taking injustices away from people. And so, just kind of helping people to understand the fact that, they as human beings investing in financial institutions and so forth have a voice. And what we're hearing, I was in Canada not too long ago, in Canada, you had teachers basically saying, our retirement fund, how do we know that it's not supporting modern slavery or forced labor or exploitation? That pressure from the consumers themselves to the investment companies is the reason why we're having this conversation now, because there's been a critical mass of acceptance of the fact that this is something that the time has come for this.
Great point.
And just to build on that, Matt, I can't agree with you more. And to bring it even more from a more tangible perspective, we know that the resource industry or the oil industry, extractive industry, is being put under immense pressure to look at these issues, not just from the E, but from the S as well. We also know that the financial community, of course, is putting under immense pressure by the regulators, by the European Central Bank, by the Biden administration, by the US Treasury, by the Bank of England, really to take much more seriously as far as part of the risk assessment process to look at the impact of the S in terms of how they facilitate or even manage or invest in companies or sectors or even jurisdictions that put these issues to the forefront. And we also know that sanctions are much more focused now, in fact, in a different way than in the past, on sanctioning countries that are perceived or real to have some kind of labor rights issues or human rights issues. So this is not just about doing the right thing. It's actually the way in which foreign policy is going to develop. It's the way that companies are going to be assessed as far as the risk assessment procedure and potential capital allocation. That's going to affect their balance sheet and return on equity. So I think that this working group, and we're trying to achieve here, is provide them with a framework for us to start that discussion and to move from theory to practice to adoptability. And then, of course, there's a much more we need to do in terms of international standards and promoting this in a much more cooperative and a collaborative way internationally. So I encourage you to Linda's point, visit our website, look at the paper. Again, we're here to start the discussion to move from theory to practice, but this is coming, and there's no question. So it's good to be part of that journey.
Great call to action, and we'll be sharing the links to the white paper, of course, at the end of this live stream, and encourage especially anyone in the investment community in this live stream to get in touch. And I think, Che, you touched on what's happening, I guess, the oil and gas and the polluting industries and what happened to Chevron, Shell, and ExxonMobil last week. I mean, that's been amazing and really, I think, inspiring to a lot of us. And let's hope that the same could happen for social as well, and that investors really take a stand. And I think all of you have touched on the issues around comparability, reliability, and having really, I guess, a taxonomy or a standard definition for what is really a sustainable investment. So I don't know, I mean, there's been a lot of talk around the EU taxonomy, the sustainable finance disclosure regulation in the EU, but do you see any other examples to start, standardizing these disclosures and really an understanding of what is the definition of an ESG investment? I don't know, Che, do you want to tackle this question?
I would love to hear Matt and Linda's view on this. So that's the challenge that policymakers are grappling with is the data taxonomy piece. And that was a lesson from our perspective when we actually did the data mapping. A number of the factors that are being used are quite binary, right? Do we have a policy and procedures on, labor rights or diversity? Yes, no. Well, that's a start, but it's not really helpful in terms of, well, does it work? How do they actually, how does that actually compare to practices, employee practices, or even supply chain practices? And this is going to be a major focus in terms of supply chain assessment. And we know this because a number of international, well-recognized companies are moving in the direction of looking at their supply chain, assessing the labor standards and diversity standards across the supply chain. Which questions do you ask? How do you then make sure that this is not about sanctioning against companies who may be less diverse, if you want to put it that way, or than other companies, but try to find a proactive way to encourage companies to do more. So this is not about a red list, a black list, or anything. It's a green list, right? It's a variation of green, and how do we encourage companies to be much more proactive and positive on that journey, because we all know that companies are extremely reluctant to share, to report, because we have a long way to go. But how do we change the narrative and change the perspective to make sure that it's okay that we're not all perfect, but at least commit to do something about it.
Matt, anything to add from your end?
Yeah, I mean, just to use a real life example, when the UK Modern Slavery Act was being proposed, initially people said, well, there's no definitions, there's no direction, there's nothing that we can do in order to do this. There was tremendous resistance. And then they passed it, and all of a sudden business said, okay, well, let's get on with it. They figured out what needed to be done. They identified the data, the definitions, the comparability, everything else. And as a result of that, we had the consistency that was needed. What the working group paper has done is pretty much done the same type of thing. We've said, now it's time to get on with this. Here are some options to consider. Here are the reasons why we should not be doing this, and let's get on with it. And so I think as a part of this process, with business for purpose, with COVID, with all of this emphasis on the fact that we need to kind of articulate the yes, let's just get on with it. Let's just get on with it. It's time to do it. The days of kind of saying it's going to come next month or the month after are over. We're there now. And so that's kind of where I think we have to be with something like this. And the sooner we get into this, the better, because then all of those standardizations and definitions and the things that are absent will be articulated, debated, discussed, and then finalized in a way that then the E and the S and the G are all there. And then the full complement of what is needed will be available. And that's really, I think, the direction that we're going in right now.
I'll just add to Matt's point. I think what is very, very important is to realize that investment community, investors and asset owners, they're agents in themselves. So, and it is an active choice whether you decide to be led or you will lead, or you will try and proactively decide what you're going to do it rather than wait for the mandatory legislation. We worked with White and Case, and their mapping, which is one of the annexes actually, of how mandatory legislation landscape is actually changing is absolutely fascinating. And it has taken some people by surprise because they don't pay enough attention to the S. And I think that's going to be very, very interesting to see, because not only is the legislation changing, there's also active litigation getting used as a tool, and civil society is getting much better at this, partnering with lawyers and so on and so forth. Thomson Reuters Foundation, I think, has a massive amount of lawyers working on very interesting issues there. And also one last point is actually, it's very interesting, also understanding of fiduciary duty is changing. So what you are expected to do will keep changing, and you do not want to be caught unaware. So I think that's very important to start, even just developing the understanding of the landscape. It's complicated, but as Matt absolutely correctly emphasized, it's complicated, but it's not impossible. We did that with risk. When risk emerged as a topic in investing, and risk and reward profit analysis, that was like, oh, it's so complicated, it's so uncertain, it's, guesswork. But hey, we figured it out. And now if you say that you don't do risk assessment, well, that just sounds really odd. And I think the same thing will happen also with ESG in many cases.
And Trang, I'm just looking at some of the questions that have come in and conscious to address them as quickly as we can. And I know that we're running out of time, but one question here is about, yes, it's not just a matter of being conscious about some of the consequences, but there's a point about, well, this is just about business. What's the role of business in terms of taking into account these sort of social that in some degree can be perceived as well, we don't really know how to do it. At the end of the day, we're a profit motive driven organization, and I guess that my point would be is that the cost of doing business, the equation of that is going to change as far as looking at other factors besides just cost of capital and return on equity, in the sense that if you do the right thing, it will actually help you to sell more. It will actually help you to promote yourself. Your customers, the people who buy your products, care about, as Matt put it, business with purpose. So these may seem to be issues that are complicated, but it's the way it's going to be, and it's going to make a difference in terms of which companies stay and which companies don't stay in the future. So it's about how you position it in the right way.
Yeah, and I think people think that there's a trade-off between profit and doing something to help the world. There isn't, So where we are now, the reality is this: profit motive is still there. That's what businesses do. They want to grow. They want prestige. But what's been added to this, for better or worse, is the fact that you also have to be responsible. And it's not that anyone's coming up and saying that it has to be this way. That's what the world wants. That's the direction that they're kind of moving. They, the consumers themselves are saying this. And so it's just the reality that just kind of has to be accepted. So it's not taking away from the fact that profit is what businesses are attempting to do. It's just something else you have to take into consideration as you go through that process of implementing and operating your business.
I'll just add on to Matt, because that was very interesting. In our consultation process, we talked to over 100 different stakeholders, and we actually did hear this, but this is investment, this is making money, this is not about, you don't understand what pressures we're under. And it's actually a good point that in some cases, yes, that will affect profitability. Doing the right thing in the shorter term will be costly. And I think we need to be intellectually honest about this sometimes, because not every single time it's going to be, very easy and cheap and not going to affect the profitability. It will. However, you need to have that long-term vision, because those externalities that businesses didn't have to pay for are starting to slowly get priced in, because we are much better at research. We start understanding how things link together. That informs the legislative process, the policy-making process, and things are moving. And I think this is just going to keep going faster, as Che, I'm sure will knows, there's also much more data, right? We are much better, and we have the data for a longer period of time, which allows us to actually draw different conclusions. And I think that's going to be a real game changer going forward.
Yeah, and just to add to that very quickly, Trang, this is about leadership, right? And there's some companies that are going to be leaders in this space, and there's some companies that are not. Number one. Number two, it's about short-termism versus, that shareholder-driven short-termism perspective versus the stakeholder vision. And it's the same thing, COVID and many, for all of us, we've all become much more cognizant of the fact that it's not just about the next year quarterly earnings, but actually it's about the business model that you have. And that business model is not about, profit versus versus doing the right thing, but in fact, they one reinforces the other. If you look at it from a sustainable business model, that's the first point. And this, I guess, the second point is to Linda, is we're committed to this journey. I think there's a lot there that we can leverage, and we can engage the investment community, but there's more for us to do as well, including our own company. So we've always had the perspective that data is the beginning. It's not the end, but certainly it's the beginning, and it's really about how you use it and how you can improve it. So we're very much on the journey of how can we increase transparency, work with organizations to ensure that the right types of data is being used for the right types of investment decisions. It's not just about data for the sake of it, but it needs to be proven, usable, and at the end of the day, from this conversation, used in investment decisions. And that's really where we're at. So more doesn't necessarily mean better, but I think focused on the data, on the key data elements that we need to promote, I think will be good.
Tons of good insights. I wish we could, continue this conversation further, and I especially liked Linda's summary around more regulation, more litigation, and the changing fiduciary duty, which again will, on the long term, affect bottom lines. And there have been some really exciting questions, but I think I'm going to move to the concluding question I had, which is really, what's next for the working group, and what are your plans? And I know you touched a bit on it as well, but just any parting thoughts from all three of you, that would be great. And perhaps ladies first. Linda, we could start with you.
Thank you. Indeed, time does fly when you're talking about sustainable investing. I think that I completely agree with Che. What we want to do as a working group is engage, educate, provide resources, and going forward, also figure out where we can add value. So what the paper does, it actually tries to identify what could be data points or indicators that show, rather than just showing effort, so whether the policy exists, to try and figure out how do you actually evaluate whether the policies and efforts are working, whether they're having the intended social performance and impact. And I think that's something that we will continue with. This has not been comprehensive. This was just the starting point, and we want to grow and develop the ideas that came out of this massive consultation and linking people and discussing these topics. And hopefully, if we even shift the needle a little bit, that's already a big achievement. If we open a good discussion about this, what needs to happen, and inspire some people, then that's pretty much an achievement, I believe.
Matt, anything to add?
Yeah, I think success in this, if we look 3 years from now, will be that the working group got the paper out, a lot of discussions took place, a lot of organizations joined a community that was committed to making this happen. This resulted in standardization. The standardization made this a regular part of what ESG is required to do. And the world is a happier, healthier, safer place as a result of the process. And so it's not about the working group alone. It's about the working group being a catalyst for change, to bring others into the discussion and to just get on with it, as we've said.
Yeah, just concluding thoughts, certainly from our end, Trang. So let me be honest, this paper was not uncontroversial. Right, because there's many different stakeholders with their different perspectives about where we are, where we should be, and what we need to do. And that for me is healthy, because if you're saying something that no one disagrees with, then you probably haven't moved the needle very far in terms of contributing to that. So I think that's the first success measure, that this is actually something that's never been done as far as I'm aware. And I think it's a great beginning that we stand behind, and all of our working groups members stand behind. Next steps, I think there's 3 for us. The first, an engagement. So this is the beginning, as Linda said, of engaging with the investment community, engaging with policymakers and the civil society, by the way. So many NGOs do incredibly important work, whether it's information and data that they have, and parts of the world that could be useful here to continue that dialogue about what do we have, what needs to be improved. The second is training. about how to use the data, right? For what purpose, and making sure that we all understand what the data actually means. And that was a lesson from us. When you actually really dig deep into the types of data that's out there in the mapping exercise, that I applaud our colleagues for really digging through. There's more for us to do there in terms of training about comparison and what's available. And then we need to continue the research. Initially, the research has been proven positive in the sense that industries, companies that invest in their people tend to do better. Companies and industry that invest in gender equality, diversity, tend to do better. And so while most of us who are in this have seen the anecdotal evidence of this, I think there's more for us to do to actually continue that assessment. And I draw here, for instance, on a NYU paper that looked at all the research from 1995, I think, to 2020, and looked at all the research, and in fact it shows that companies that have a high S score have a lower risk volatility, they do better stock performance, and all the other things that are so important. But I think there's more of that with this working group to contribute to looking at that, and we'll be hopefully doing more of that work. So it's I think it's a great start. There's more for us to do, but stay tuned on announcements on where we go from here.
Thank you so much, Jay, Linda, and Matt, for your time and for all the insightful answers and perspectives shared. We really appreciate it. And again, I think this is really a call to action for everyone who's listening in to start really looking at social metrics, start integrating it into your decision-making processes, and look at all the resources that are already available and be part of the conversation. So thank you to the three of you for being here with us today. And we'll share, I think, the link to the white paper soon. But I just wanted to thank you first for your time.
Thank you.
So yeah, as I mentioned, the white paper that we were discussing today with the 5 myths related to the S in ESG can be accessed through the QR code on screen or through the links shared in the chat. I encourage you really to check out all the amazing resources shared in the paper and to find out more about the work of the working group. And I look forward to seeing you at our next live stream. Until then, take care.